Hi, and welcome to Hull and Hull TV. I'm Dana O'Brien, and I'm joined by founding partner Ian Hull and managing partner Suzana Popovic-Montag at Hull and Hull LLP, an innovative law firm that practices exclusively in estate, trust, and capacity litigation. Here at Hull and Hull TV, we're exploring the issues around estate planning that affect you. Ian and Suzana, for anyone taking on the roles and responsibilities of an executor, that also means income tax and accounting requirements. Let's start with taxes, Ian. How many returns are ordinarily filed on behalf of the deceased?
Well, once someone passes away, the deceased's a terminal return is filed on behalf of the deceased, and that reflects what is essentially the most important tax that one pays, and that is the income tax that you pay on the deemed disposition of your assets. So your assets are deemed to have been disposed of the day before you die, and a tax return has to be filed to reflect that. And that's a typical scenario where your financial portfolio will crystallize on that day, and you'll have to pay all the capital gains. More importantly, an easy illustration is cottages. The deemed disposition will affect that if you own a cottage, for example. That's the first return to file.
And the second return, is that with the estate, Suzana?
Yes, that's the T3 trust return, and that'll pick up the income that's been generated by the estate after the date of death.
Now, what opportunities are there, Ian, to minimize taxes?
Well, I think one of the things is that there are a variety of schemes, and for the purposes of this discussion, we're sort of just trying to identify the issue, because we've got charitable giving as the classic scenario. There's lots of corporate machinations that can be undertaken. The classic estate freeze that gets created in estate planning during your lifetime. So there's a great variety, and what it does is it reminds my clients all the time to go talk to their advisor, rethink where they can minimize the tax, because although there are after death tax planning steps that can be taken, those steps are much more restricted and less flexible in terms of options.
And when should an executor apply for a clearance certificate from the CRA, Suzana?
Well, a clearance certificate is not something that an executor has to apply for, but I always tell my clients that I think that it's the right thing to do, because as we spoke about on previous episodes of Hull and Hull TV, and Ian and I have spoken about on podcasts, there is this personal liability that's attached to the position of an executor, and you want to make sure that to the extent you can, CRA is happy with what has been done.
Let's switch gears for a second and talk about the accounting obligations, formal and informal accounts. Ian, if you could explain the difference.
Well, there are fiduciary accounts and records that you have to keep, and there is no magic to informal accounts. They are literally, you put on an Excel spreadsheet and you match what comes in and what comes out, and you match it up to the receipts. And that's what lots of people do when they balance their checkbooks during their lifetime. That is the absolute minimum for every dollar that comes in and out of an estate that an executor is expected to do as a fiduciary and in terms of accounting. Now, there are formal accounts that the courts will restrict the style and the presentation of those accounts that a fiduciary is also obligated to, in some circumstances, prepare.
And the role of the executor in all of this, they are expected to adhere to a certain standard, correct, in terms of keeping the accounts as they should be?
Well, they really are. And Suzana and I spend a lot of time with our clients trying to pick up the pieces. When they come to see us, they've got a shoebox of receipts, and they say, you know, my brother's not happy with my work that I've done on the estate, although he's a good for nothing and I've done everything, but I have to, prove it to him. And the truth is, you have to prove it. As a fiduciary, you have the positive obligation to produce those accounts in readable and presentable form.
And where do the executor's accounting obligations end, Suzana?
Well, really it'll end with the receipt or a release that you'll get at the end of your tenure as an executor, and that's the case if you've got everyone who's got a financial interest in the estate, who's of age, so 18 years or older, adult, can sign off a release. Then in that case you don't necessarily need to pass your estate accounts. But if you're not in a position where you can get a release from every beneficiary of the estate, or if there are minors or incapable beneficiaries, then in that case you may be applying to the court to actually formally pass your estate accounts.
And is the sign-off, does that generally take place within a certain period of time?
Usually at the end of the administration.
Ian and Suzana, thank you. And thanks for joining us on Hull and Hull TV.
you.